We've updated our latest mortgage stress and default modelling to December 2017. So today we discuss the results and count down the latest top 10 most stressed suburbs across Australia. Hi, I'm Martin North, Principal Analyst at Digital Finance Analytics. Today we discuss the latest mortgage stress and default results and count down to the current most highly stressed postcode in the country. This is based on our updated mortgage stress and default modelling for Australian mortgage borrowers and to the end of December 2017. Our analysis uses the DFA core market model, which combines information from our 52,000 household surveys, public data from the RBA, ABS and APRA, and private data from lenders and aggregators. The data is current to the end of December 2017. We analyse household cash flows based on real incomes, outgoings and mortgage repayments, rather than an arbitrary 30% of income. Households are defined as stressed when net income does not cover ongoing costs. Households in mild stress have little leeway in their cash flows, whereas those in severe stress are unable to meet repayments from current income. In both cases, households manage this deficit by cutting back on spending, putting more on credit cards, and seek to refinance, restructure or sell their home. Across Australia, more than 921,000 households are now estimated to be in mortgage stress, and that compares with 913,000 the previous month. This equates to 29.7% of households. In addition, more than 24,000 of these are in severe stress, up 3,000 from last month. And we estimate that more than 52,000 households risk 30-day default in the next 12 months, which is similar to last month. We expect bank portfolio losses to be around 2.8 basis points, although in WA losses will rise to 4.9 basis points. Households in New South Wales are showing the most significant rise in stress, and this is thanks to larger mortgages relative to incomes, whilst income growth remains static. As continued pressure from low wage growth and rising costs bites, those with larger mortgages are having more difficulty balancing the family budget. As a result, risks in the system continue to rise, and while recent strengthening of lending standards will help protect some new borrowers, there are many households currently holding loans which now would not be approved. These stressed households are less likely to spend at the shops, which will act as a further drag anchor on future growth, one reason why retail spending is muted. The number of households impacted now are economically significant, especially as household debt continues to climb to new record levels. Indeed, mortgage lending is still growing at 3 times income, and this is just not sustainable. The latest household debt to income ratio from the RBA is now at an astronomical record of 199.7 and will likely break above 200 in the months ahead. The forces which are lifting mortgage stress levels remain largely the same. In cash flow terms, we see households having to cope with rising living costs, whilst real incomes continue to fall and underemployment remains high. Households have larger mortgages thanks to strong rises in home prices, especially in the main eastern state centres. While mortgage rates remain quite low for owner-occupied borrowers, those with interest-only loans or investment loans have seen significant rises. We expect some upward pressure on real mortgage rates in the next year as international funding pressures mount, potentially a local rate rise, and margin pressure on the banks. And the recently passed US tax reforms are likely to put more upward pressure on rates. Our probability of default extends our mortgage stress analysis by overlaying economic indicators such as employment, future wage growth, and CPI changes. And we've also extended our core market model to examine the potential of 90-day defaults and portfolio risk of loss in basis points and value terms. Losses in value terms are likely to be higher from more affluent households. Regional analysis shows that New South Wales has around 259,000 households in stress, compared with 252,000 last month. Victoria has 255,000, compared with 253,000 last month. Queensland, 156,000, compared with 157,000 last month. And Western Australia, 122,000, compared with 124,000 last month. The probability of default rose, with around 9,800 in Western Australia, 9,500 in Queensland, 13,000 in Victoria, and 14,000 in New South Wales. So now let's look at the top 10 highest postcodes in mortgage stress across the country. As normal, there are some changes from last month as conditions vary across the states. But overall, we see relatively more stress in Victoria and New South Wales. So we'll count down to the postcode with the highest levels of mortgage stress. We start in 10th place with postcode 2977, which includes Cannons Creek, Cranbourne and Devon Meadows, and is located about 54 kilometres southeast from Melbourne. The average home price here is around $491,000, compared with $327,000 in 2010. Here, 4,138 households are in mortgage stress. There are around 25,000 households in the region. The average monthly income is $6,720, and the average mortgage repayment $1,800, or 26% of income per month. 87% of properties here are separate houses, and 56% have mortgages. The average monthly mortgage repayment here is above the Australian national average. Another Victorian postcode is in 9th spot this month, 3810 Pakenham, with 4,301 households now in mortgage stress, and down from 7th place last month. It is around 54 kilometres southeast of Melbourne. The average home price is around $470,000, compared with $290,000 in 2010. The average age is 32 years, and there are more than 12,600 families in the district. The average monthly household income is $5,900, which is below the average in the state as well as nationally. 46% of homes have a mortgage, compared with the Victorian average of 35%. The average monthly mortgage repayment is $1,700, which is around 29% of average incomes. In 8th position and back in the top 10 this month, we go across to WA to 6030, which includes Clarkson, Merriwa and Tamala Park, 34 kilometres north of Perth on the coastal strip. There are around 11,000 households in the area. The average age is 34 years and more than half have a mortgage. The average home price there is $392,000, down from $416,000 in 2010. And we estimate that there are 4,414 households in mortgage stress. The average income is around $7,000 a month, which is above the national average, but the average mortgage repayment is over $2,000 each month, well above the national average. 7th is Victorian postcode 3037, which includes areas around Delahaye, Hillside and Sydenham, around 20 kilometres northwest of Melbourne. This area was 10th in place last month. Here, around 4,674 households are in mortgage stress. Of the 13,000 households in the district, more than half have a mortgage, and the average age is 33 years. The average home price is around $570,000, which is up from $365,000 in 2010. The average monthly income is around $7,200 and the average monthly repayment is $1,730. In sixth place is another Victorian postcode, 3350, which includes Ballarat and the surrounding area. It's about 100 kilometres from Melbourne and is down one place from last month. In this region, there are 4,979 households in mortgage stress. The average property value is $335,000 compared with $305 in 2010. There are more than 14,500 families in the area and the average age is 37, which is line ball with the average across the state. The average monthly income is $5,300, which is well below the national and state averages. Around 33% of households have a mortgage and the average repayment is $1,408 a month. In fifth, and up from number 3 last month, we go to Queensland to 4350, which is around Drayton and Toowoomba, and that's about 100 kilometres from Brisbane. We estimate 5,403 households are in mortgage stress. The average home price is $495,000, compared with $382,000 in 2010. There are around 27,000 households in the region and the average age is 37 years. The average income is $5,300 a month and around 30% have a mortgage and the average mortgage repayment is $1,510 a month, which is 28% of average incomes. In fourth again is the area around Campbelltown in New South Wales, 2560. Which is around 43 kilometres inland from Sydney. Here, 5,883 households are in mortgage stress. The average home price is $646,000, which is up from $320,000 in 2010. Around 20,000 households live in the area and the average age is 34 years. The average income is $6,100 a month. 37% of households here have a mortgage and the average repayment is higher than the national average at $1,800 a month, and that equates to 29.5% of average incomes in the postcode. In third, and down one place this time, we cross the Nullarbor to WA to 6065. And this is the area around Wanneroo, including Tapping, Hopping and Lansdale, and is located about 25 kilometres north of Perth. It is an area of high population growth and of residential construction, mainly on smallish lots. There are more than 6,115 households in mortgage stress in the region. The average home price is $421,000 compared with $402,000 in 2010 and down from a peak of $490,000 in 2014. There are around 17,000 households in the district and the average age is 33 years. The average income is $8,300 a month and 58% have a mortgage and the average repayment is $2,170 a month, well above the Western Australian and national averages. In second, and down from fifth place last month, is Victorian postcode 3805, which includes Narre and Fountain Gate. This area is around 38 kilometres southeast of Melbourne. Here, 6,245 households are in mortgage stress. The average home price is $588,000 compared with $366,000 in 2010 and there are more than 15,000 families in the area with an average age of 34 years. The average household income is just over $7,000, which is higher than the national monthly average. 54% of homes are mortgaged and the average monthly repayment is $1,700, which is slightly below the national average of $1,755 a month. But the postcode with the highest count of stressed households, once again, is New South Wales postcode 2170, and that's the area around Liverpool, Warwick Farm and Chipping Norton, which is about 27 kilometres west of Sydney. There are 6,807 households in mortgage stress in this area. The average home price is $815,000 compared with $385,000 in 2010. There are around 27,000 families in the area with an average age of 34 years. The average income is $5,950 a month. 36% have a mortgage and the average repayment is around $2,000 each month, which is more than 33% of average incomes. So we continue to see mortgage stress still strongly associated with fast-growing suburbs, where households have bought property relatively recently, often on the urban fringe. The ranges of income and property prices vary, but note that it is not necessarily those on the lowest incomes who are most stretched. Banks have been more willing to lend to these perceived lower risk households, but the leverage effect of larger mortgages has a significant impact and the risks are underestimated. We'll continue to monitor mortgage stress and will update our core market model next month once again. Finally, I think it's worth repeating that many households in stress do not have a robust household budget, and creating one is an important first step to getting to grips with stress. Whilst putting more on credit cards and refinancing may seem superficially attractive mitigation steps, our analysis shows that these are often only temporary fixes. Getting to grips with where the money is going is an important first step to tackling the problem. Remember too that banks have an obligation to assist in cases of hardship. So, if you are a household in difficulty, talk to your lender rather than just hoping things will work out. Given flat incomes and rising prices, we think this is unlikely. If you found this useful, do leave a comment below or subscribe to receive future updates. You can also read much more about the mortgage stress footprint on our blog. I'm Martin North, Principal Analyst at Digital Finance Analytics. Thanks for taking the time to watch.